Okay, hi, this is Chuck, better known as lowtrade. Tonight I've been fooling around for the new year, and I have some new video software I figured that I'd try to use. And after spending about a half an hour playing with various big board stocks and strategies and thoughts and so forth, I thought, well, what the heck, I'll just run a video on how stupid I am and the way that I look at stuff. So let's start for by looking for a stock today or for next week. Okay, start with I do not like hot stocks. I don't like emotion, so I'm not even going to bother with that. Let's think about, okay, comeback stocks. You could be looking over here for what looks good for a comeback stock. So let's look at some comeback stocks. No, she fell too far. Broke the resistance line. Let's go. Okay, I'll tell you, broke the resistance line. Here's the resistance line. Whoop. No, we were looking at the 3-month chart, so the resistance line is actually here. And it broke the resistance line. Now, what this is showing you is something I've mentioned before, that you start at a long time chart. Anytime you're doing a chart evaluation, you start a long time chart to see what is the overall trend and the overall retail thought about what's going on with the stock. Now, looking at this, you can see there's an overall uptrend in the stock. Actually, what's occurred, you have 1, 2, 3. So you have 3 points will give you a trend. Some people use 2. I use 3. So we got a trend line here, which is established, which is an uptrend. Now, the next thing for a long term, there's a chart pattern called a bump and run. And a bump and run I normally use only for long-term patterns. And we're looking at a long-term chart. So if we look at this trend line and we look at all of a sudden, this thing shot up here, okay, there's your bump and run. If I drew a line from here to here to here, there's your bump and run. And what the bump and run tells you is once the new upper trend line is broken, odds are it's going to come back to previous trend and possibly even below the 50-day. Okay, let's look over here. The 50-day is orange. Okay, so there's orange, and guess where it went? It went down to the 50-day. Odds are it's going to come all the way down to this line. Okay, so I'm not really interested in this stock, but that's just some crap that's entered my mind. So let's go back to where we were. Okay, we were looking at I don't see anything interesting here for a comeback play. Now, this looks a little bit interesting because it is got a 3-month trend, which is going up, and it had a reversal at the top trend line, and it's coming back to bounce off the bottom trend. So let's see what this is all about. Okay, long term. I am doing this backwards. I mentioned you should look at the long term first, but because I am evaluating the way I am, I'm looking at the short term first. Here we have the same situation as the last one we looked at. Long term things are looking good. It got a little out of hand and gave us a bump and run, and it's coming back to a bump and run. So odds are it's coming back to the 50. And it probably will retrace all the way down to the lower trend line. So that one's out for a comeback stock. Okay, comebacks. Oh, what's that? Possible double bottom, not interested. Scary. Also, let's see what Seed is doing. Okay, Seed has been relatively dormant. had some emotion. Yeah, not interested at all. The only good about this stock is it's all of a sudden generating a shitload of the emotion, and I don't like emotion, so I'm not even sure why I'm looking at it. Okay, to hell with comeback stocks. Let's go down and look at chart pattern stocks. I'm a chart pattern guy. I love flags, but FinViz doesn't offer any flag patterns for you, so my next favorite chart pattern is the ascending triangle. That one sucks. That one sucks. That one broke out, but I don't. I'm looking for a 10 to 20% swing trade, basically. And when you get the price levels up into the 70s, you don't get that kind of swings. So I'm looking for something in the $1 to $5 range where you can get a 10 to 20% swing possible. That one looks interesting, but it's long term, a little too long term. Let's go see what their hype stocks are. Okay, 30 bucks, 15 bucks, 12, 70, 20, something in the one. This is close. Interesting. Bing, bing. It's down the bottom. It's breaking out the bottom. No longer interesting. This one also is no longer interesting. It's channel on the bottom rather than the top. And I might find it interesting if it ever goes up to $6 again, but I don't know. 51, $6. That's a joke. That's breaking the wrong way. 80 bucks. All the ones that are breaking north are too expensive for what I'm interested in. So I'm glad you're spending the night with me playing. I see nothing in the ascending what they're offering me that's interesting for what I'm looking for. Nothing in the under $5 range. That one's a joke. Okay, so let's go back again and see what else we can find. Wedge. Okay, I like wedges, but normally a wedge pattern is a longer term trade. But with a wedge, I say that if it walks out of the point of the wedge, if it walks out, it has a stronger chance of running than if it runs out. Meaning, let's go look at one. Okay. Where was that? Wedges. Okay. And I'll explain a little more detail. There we go. And that's under $5. There's a wedge. Okay. Now, when I say with a wedge, as it reaches its peak, if the price walks out, means going sideways, pretty much sideways, it has a better odds for running up, like on a single bounce play. On the single bounce play, if you've ever seen my video, you play the resistance levels. You step up, you step up, you step up, you step up, and you step up, and you step up, hoping that eventually it'll go all the way back to the top. Okay? And if it walks out of a falling wedge, the odds for that to continue is stronger than if it runs out. In other words, if it broke here and broke out and then broke out up here, that would be an emotional breakout. Odds many times when you're looking at a longer term pattern, which a wedge normally is, if it breaks out on emotion, you'll see throwback. Throwback meaning that the price will break out and then all of a sudden retail will realize, hey, this is just emotion. And logic will set into their brains and it'll come back down into the channel. It happens all the time. So this one is sort of not walking at it. Although they're very tight candles. This one's interesting. But it's a $10 stock and I'm looking for a $5 stock. I thought that was 5. So we'll skip that one. Now you're getting an idea how screwed up I am. Okay, wedges. The falling wedge. Let's go back to them. We were looking at falling wedges, trying to find a $5 falling wedge or under that was walking out. Okay, we have a long-term wedge. We have it not running out. We have it walking out, and it's under $5. Now this one's a little more interesting. Let's take a closer look at this one. Okay, the next thing I'm involved with is volume. Does it got any volume? And because of stock charts, the way that they plot stuff, volume is difficult to determine. But we got 5 million here. That automatically means if it's starting at 5 million, it's got at least a million average volume. So let's go down and take a look at this one. This one is doing what I want for a wedge. It is walking out. This one is a single bounce play, and it's on the big boards. It's under $5. It looks interesting. It broke out on a little high spike, but not a high spike in volume. And the following day, there was some profit taking. But it looks like the volume's half of what it was before. Let's go take a closer look at that. IO. Okay, so we'll go IO. Let's see what IO looks like with a better chart. Okay, let's make this. Okay, you always look at the longer chart first to see what's going on and see the trend and so forth. Right now I'm looking for a play. So let's go to the 3-month chart and see how it looks. Okay, 3-month chart. The volume, let's evaluate it. Inspect. The volume on the breakout day was 1.8 million, almost 2 million, and the volume was 1.2 million. So it's just profit taking. I like this. Okay, let's go back to this again. Let's see what in the world the fundamentals look at this and why this thing's been falling so far for so long and why I possibly think this may ended up being a good single bounce play. Now, in a single bounce play, remember I've said before in my videos that you never enter until after the first resistance is broken. So this is only going to end up a watch stock. I like this as a watch, but not as for next week. I'm going to spend a little time on it just to see if I should put it on watch. Okay, let's look at what we got. Oh, we don't have a very good management. We have shitty, we have average gross margins, operating margins suck, and profit margins are even worse. So we have poor management, okay? Somehow they're spending more money than they're making, and even though they're getting profits in their gross margins, they're chewing them up in operating costs. Insiders, ouch. Next thing I like is to see what the big guys are doing. Insiders, the people that own the company, Scientific Instruments Company, there's only 1% of them that own any stock. Now, the good thing is that 1% is buying. Okay, institutional, a lot of institutional. Anything over 50% is a good institutional precipitation. But they've been selling. Okay, so big guys are selling, little guys are buying, and shorts don't think it's going any lower. Okay, that's a good sign too. If shorts don't think it's going any lower and it's walking out at lows, okay, that might be another sign that there's a turnaround. Smart institutional people are getting out because they've been watching this damn thing go down and not turn. So this may turn around if this bounce is actually going to happen. The idiots, the talking heads, December 13th. Barclays, $4 to $6 downgraded to $4 to a neutral to 750. Okay, the average price target, and we got 1, 2, 3, 4, 5 evaluations in 2013. The average price target is around $6. And it's a 3. So the talking heads who are 90% wrong all the time, but at least they're in agreement that they think this thing is worth more than it's trading. Okay, now we got a gap up here. This is a good sign. As you know, most gaps. This is a let's see. We got this is a con. This is not a common gap. This is a breakaway gap because she's holding here and all of a sudden she plunges. What in the world's going on in the beginning of November? What happened in the beginning of November for when this thing was challenging the upper trend line for it to fall to hell? November, mid-November. Oh, okay, earnings. Non-reliance on previous financials. Earnings. Growth conference. November 15th. There it is, the quarterly report. Okay. November, they didn't have a good quarter. Now, that really, to me, is expected because management's doing a sucking job, you know? But what we're looking for is the possibility of turning around. Okay, so I'm thinking there's a very strong possibility because this walked out at a wedge. Being a technical trader, I like that. There's a gap above, a breakaway gap on bad news. So if this thing turns around and starts coming up towards the open gap area, you will then have crossed the first top resistance. So I'm not going to take this any further. Mentally, I am satisfied with the fact that this sucker may be coming back. And if it comes back, I'm gonna expect, if I go in just under $4, I'm going to expect a minimum of 450 because that gap fill is going to fill. And then possibly up to 5, and then possibly up to 550. So this is a nice watch stock. So we're going to get your piece of paper and your pencil and write down IO for watch. It's not what I was looking for, but now you know how crazy I am. Welcome to my mind, that kind of thing. So let's go down and see some more wedges that might be more interesting. This one's walking out of a $5 stock. But I don't like the wedge. It's not steep enough, and this is more like a channel. Now let's go. I'm looking for something a little more pronounced. This is a nice wedge. Price range. Interesting, and it's walking out. Volumes, 2 millions. So you're between a half and 1 million, which I like for a $3 to $5 stock. Between a half a million and $1 million, I like it for a $3 to $5 stock for volume. Let's take a look at this one. It's a REIT. Okay. Shitty dividend. It's only 4%. God, you can get that off of a bank or 3M or an industrial company. Never mind. Not interested. Okay. 11 cents. That sucker's scary. Why it's still being traded, I have no idea. Or hasn't been delisted by now. This thing's been... What the hell? This thing's been trading under 20 cents. Under 25 cents for months and months and months, and it's still listed? Oh, well. There's a $2 stock that walked out. CT, what's the volume? Nope, no good. See the volume? 50K. This is no volume. $0.85 with a flag. Why is it still trading? Another one. It's been trading under a buck. Oh, okay. Been trading under a buck. They had to keep it up there for over a buck for at least 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days they kept it up over a buck, and it fell down. I just did a post about this. When you see these stocks that are getting delisting notices, that they're under $1, someone will come along in the corporation or one of their major shareholders or whatever will come along and they'll put some money up front and they'll buy themselves out of the delisting. And they bring it back up to $1, okay? And then they got to keep it 10 days above $1 or it goes back on the delisting. And this is exactly what I was posting about. This sucker they bought themselves out of their delisting. They stayed up above $1 for 10 days, and then they left it go. Okay? And then retail came back and brought it back down. Not interesting, but it's a cool story about what I was posting about a month or so ago. Falling wedge, short one. Too expensive. This is a flag, and I don't like the wedge at all. $8, $1.40. Now, what do we got here? No volume. If 1 million shares are up here, it's hardly even registering, so it's probably under 100,000 a day. Okay. I don't find anything in the wedges that are interesting. Okay, we'll go back. I'm going to give up on charts, finding something on charts. Let's go back to, let's say I'm starting from the beginning. Let's see what's been really interesting lately. You go up to groups and see what the performance is. Conglomerates, 6 to 3 months, conglomerates have been on the top. There's only 20 conglomerates, and out of 20, there's only 5 that have any volume, so conglomerates are a waste of time. Industrial goods has been good. Industrial goods has been good. Industrial goods has been good for a month, for 3 months, for 6 months. Industrial goods is a little above the middle of the pack for the year performance. So let's say we're going to go and we're going to do a little searching in industrial goods. So we'll go to overview, we'll come down to industrial goods, we'll see everybody that's here. Okay, first thing I like under evaluating this type of information is what's their performance. I'm looking for a swing trade. So I'm looking for a 3-month chart to do a swing trade, so I'm going to look for quarterly performance. Which stocks under industrial goods are giving me the best performance? Now, the other thing I like under this is I want at least 500 in the $1 to $5 range. I want at least 500 to 1 million shares traded daily. Okay, go over relative volume, current volume, over 500K. So we're going to shorten our list a bit, over 500K. Okay, the other thing, at this point, the other thing that gets a little interesting once in a while is to find out, because now I'm looking for a swing trade on a 3-month chart and has the best performance. Let's see what's been really hot recently. Now, relative volume basically is a ratio between the average volume and the recent volume. So if you get a, say, a 2-to-1 increase in volume, okay, it means it's recently, the past couple weeks or so, it's been hot. So we go to a relative volume that's over 2, and now we've broken our list of over 300 or whatever the heck it was. Let's go back. Yeah, 350 original stocks. I've weaned it down to 11 stocks. Okay, I've got over $500,000 volume. I've got recent activity. It's twice the average volume. And I've got the best performance for the quarter. So let's chart over and look at the charts and see if anything is interesting here. Motion, don't like it. But it also shows you that because of that 1, 2, 3, 4 day run, look at all that volume. That's why you have a relative volume 6 times the average volume. Okay, this looks like it could be a heads and shoulders. Uh, let me show you what I'm talking about. Okay, you got a shoulder, you got a head, and it's a coming back up. So if this thing uh, consolidates here and then comes back down, it'll be heads and shoulders. Uh, if you want to look at a flag breakout from here up and then a flat flag, that didn't happen. So I don't like this because nothing looks positive about that thing actually continuing. Okay. We have a double bottom and a breakout, which looks like, let me show you this one. Okay. I'm going to call this a double bottom here. Down, and up. Now it's late because it's already broken out. For the double bottom, you draw your line from the previous high to the center high and then down, and that's where it breaks out. For your small entry, for your large entry, where it breaks out at resistance, that's your second entry. But to calculate the target price, you go from the bottom to the top. Okay, so that's we'll say $50 to $58. No, we'll say $48 to $58 is $10. Yeah. So from say 58 to 68, it's already reaching target. So the double bottom is no good. Now, looking at the long term, we have something, never mind. For $66, I'm not interested in anyhow. But I can tell you that a long-term flag is I see here, or should I say a long-term pennant here. A long-term, in case you're not familiar, a long-term, you have an uptrending stock, then you have a pennant because of the triangle. Okay, this could be considered, if you drew a line, I can't draw on this chart. If you drew a line over here, up to the high, and then drew the triangle, it would be a flag with a pennant. If you consider it just a symmetrical triangle, which it is, in an uptrend, that a long-term uptrend with a symmetrical triangle is normally a continuation pattern, meaning that once it breaks out, it's going to continue this trend line. So if you drew a trend line here and you duplicate that trend line over here, that could project what you would expect. This could be a very good position play for a quarter. For a swing trade, no good. Also, it's a high price stock. So what you're looking at here, me evaluating this chart in a few seconds, it's a very positive trend line. It's a symmetrical triangle or a pennant breakout, which is very positive, and the trend should continue at about the same rate that you see. So over the next 3 months, you can see this thing going up into the 70s and maybe even $80. Not what I'm looking for. I think this is getting awfully long. I don't know how long I've been mumbling, and I still haven't found a swing trade for next week. It's not easy. This is interesting. We got a double bottom here, bing bing, with it to run a line down. It's sloppy. Never mind. Wait a minute. We got an overall long-term pennant and symmetrical triangle, just like I was discussing, but only in the dollar range. Volume is increasing recently. That's why it's over 2 times the average volume. Company sucks. Company management sucks. There's no dividend. Plenty of employees. Industrial electrical equipment. So this is insiders are buying, but there's hardly any of them. Institutional is about average for this size company, being so small. Shorts. Shorts are big. Shorts are big on a breakout. Shorts are big on a breakout means could there be a short squeeze? Is this becoming more interesting? Okay, short squeeze. Let me go back here. Where's my short information? Do. Short interest. Okay, we were looking at, what the heck was it? CPST. CPST. Let's see what the recent short activity is looking like. There she comes. Okay. October, they started shorting when the price went up. When the price came down, the shorts held. Present short interest as of the 15th of December was 15%. FinViz said, okay, same short interest. This interests me because something's causing them to be buying like crazy. Okay? It's broken out of the upper trend line of a symmetrical triangle. It's only $1 and it has a large short position, which means that if it continues, you're going to get some short squeeze volume into this thing. Now, let's see why. Oh, let me look at this. How many days has this thing been running already? It's hard to see. Okay, let's go back. CPST. CPST. Let's look at a 3-month and just count how many days this thing's been running. Okay, anyone that's been following me knows that an average move will last 3 to 5 days. We got 1, 2, 3, 4, 5 days of running already. We are up to resistance, and it broke out of that long-term wedge, or should I say that symmetrical triangle. It broke out, but oomph. What's just happened, and all this volume is reaching enough is enough. So while it has prospects that if it ever breaks this 140, you could get a short squeeze, could run like hell. Guess what? I expect right now that it will bounce off of 140 on Monday and probably retrace a little bit. And that's where you watch it, and wherever it bounces, if it bounces before 38% fibs, odds are it's going to come up and break 140, and then the short squeeze might happen and the sucker might take off. So this has got good potential. Guess what you do with something like this? You put it on the watch list. CPST. So we got 2 on the watch list and nothing to play. We got IO and CPST. Okay, let's leave these here. I want to leave both of them here so I can reference back to them. Okay, buy CPST. That drug out. JB. Don't like it. I see a symmetrical triangle that's breaking out. But it's $10. I don't want to play $10. $83. I could have winded that. Okay, I'm getting lost. I've probably been 15 minutes playing with this, and I haven't found a trade for next week yet. And I think that's enough babbling for you guys. Welcome to Online. It's kind of screwed up. But now you know what I go through when I work. This is how I work. It's kind of screwed up. Good night.